Amid the government shutdown, markets are looking for clues about the health of the job market. Steve Leisman joins us with the latest numbers from Challenger on job cuts. What's going on?
Yeah, well, this is like a clue from like a cough or a sneeze or whatever. But announced corporate job cuts, Andrew, in the U.S. surging past 1 million so far this year, with 153,000 new layoffs announced just in October, according to Challenger. That is the worst October since 2003. Here are the numbers. October up 153. That compares with September. That's 100,000 more than September and 100,000 more than this time last year in October 2024. Andy Challenger commenting, some industries are correcting after the hiring boom of the pandemic, but this comes as AI adoption, softening consumer and corporate spending, and rising costs drive belt tightening and hiring freezes. Announced layoffs don't always lead to actual cuts and could take place from attrition. But the report puts in perspective what we've been reporting here day after day, week after week. Series of marquee announcements unveiled in recent weeks across U.S. industries, including UPS, Amazon, Target, among others, Paramount, Rivian, all these companies there. Government has been responsible year to date for 308,000. But look at that, tech 141. That could be where you see a lot of the AI, maybe some in warehousing, but a big chunk of that's going to be UPS, as well as potentially some hit from reduced flows of trade. Retail's up there, as is services at 64,000. You take out the Doge cuts, the number's a bit better at 800,000, but still well above last year. Challenger doesn't see much in the way of hiring, saying announced plans are 35% below last year, and they're skeptical about the number of new hires for the holiday season. For some on the Fed, this data, together with other reports, could be the sign they're looking for of job weaknesses about whether to cut in December. Well, guess what? We get to ask a member of the Fed that question directly, 8:30, when we sit down with Chicago Fed President Austin Goolsbee. Andrew, Joe.
It's going to be fascinating to hear what he's got to say about all of this.
Yeah, we've had a lot of mixed data. We had the the ADP was up a little bit, 42. The ISM headline was better, and you saw this, the bond market sold off a little bit. We're 415 on the 10-year. I don't know if that's true this morning. I looked earlier.
Okay, so before we get to, because we'll talk to Austin later, you have a dual mandate. What do you pay attention to in this world, because it's such a blunt instrument?
The answer is yes.
I think we're at a point where I'm willing to believe that we've hit bottom and we're on our way back up.
For what, jobs?
Yeah.
So that means you don't cut.
I think AI allows you to cut because of productivity gains. I think we.
But what about the demand for capital from all of the?
We could have the best. We could have the best of both worlds. Don't talk about raising.
No. Shouldn't that raise the
no, I mean
cost of
cut.
capital?
Keep cutting. No, I know. Keep cutting.
We got to run, but we're gonna come back. We got Austin Goolsbee. Literally,
we got
in less than a half an hour.
There's only 3 more cuts built in.